All right, everyone, here we are with ticker symbol SAVA, Cassava Science Inc. And before we jump into this chart, I want to say welcome to all the first-time viewers and investors. Welcome to the channel. Invest for tomorrow. To all the subscribers, welcome back. And as we jump into this chart, I want every single investor to be aware that I have a new ticker symbol to add to your watch list towards the end of this video, but I'm going to talk about two ticker symbols first that were mentioned by viewers and investors. I want to go over it. You guys will be able to see how I go ahead and look at these stocks from my perspective and learn a little bit more about the reasoning behind the ticker symbols that I mentioned towards the end of the video. So there's going to be three ticker symbols. Two are going to be a learning experience to talk about and look over. And the last one is the one you definitely want to add to your watch list moving forward. So here we are with ticker symbol SAVA. So when you look at this chart, it looks like a rocket, right? A rocket, literally. This was at the beginning of the year, like at $5, then around $18, $20, and volume has been pretty high, right? It's not in the 100 millions, 200 millions, but it's pretty high. Now, this was at $87 market close. It was around this area and it just ran up. So when you look at this chart, how do you distinguish, where is a good point to look at this? Well, it's been so bullish that there's some cues here, right, where this leveled off, which is close to the last couple hours of the day to look at, but then it's still a broad stretch from way up here. So the first thing I want us to know is the 50-day moving average, and that's 67. I just round that up to $61 from how big and broad this is. $61. It's, to be exact, it's 67, but I'd round it up to $61. Now, as long as we're above it, we're in bullish territory, and the moment we're below it, we're in bearish territory. So this is kind of your midway point to know where this is at, but since it's such a broad stretch, again, like $60 away from the current price, what do we look at? So the first thing I would look at is right here at this point where it kind of leveled off at 78.65, but it's still a huge stretch. So I'm going to narrow this down, but I want you guys to have this point as well written down. 78.65. That's just in case the volatility takes this one down in a downward spiral. And then between that point and the 50-day moving average what to look for as tomorrow plays out. Now, the 50-day moving average, if this momentum doesn't continue, will catch up to the price. So I want every single investor to be aware of that. Now, the most important point in the whole entire chart is right here at 125. Literally, 125. That is the exact point of reference for this to reach newer highs and new resistance levels. 125 is the resistance level that the bulls need to break through to work its way up to newer highs and work its way up much more into bullish territory and further away from the 50-day moving average and continue this bullish run. Now, if that's not accomplished, I would narrow this down really closely here to 113.52 to see how it's reacting. If you want to round it up or down, you can, but most importantly, 113 is the most important point right now based off the chart, but to be exact, 113.52 right here as a support. This is your first support level. If that gets broken through, you have another one here, which is a little bit broader, which takes you right back down below $195, or you can use this one here at 103. Okay, these are the points of reference that I would be looking at before worrying about any other down here, because of the fact that the volatility could be really fast and it could just bounce right back up. So that's why you want to dissect this as much as possible. So 113, right? Very important here. And then down here at 95, and then also right here at 103. Okay, so 113, 103, and 95 are the 3 points I would be looking at on the upper end of things. And on the lower end is back down here at 78, 75 bucks before looking at anything else, and then 75. But as of right now, the most important one to look at this very narrowly is 113, And then I would bring it even down to 103, and then I'll look at $95 to see what's going on and if this can bounce right back up or how's it going to react. Because we've seen it have a run already to 74 and it pulled back down to almost 50. So from where it's at now to about $95, those are about a good window of $20 to $30 to see how this is reacting before worrying about anything below here based off the history of the chart. So keep those points of reference in mind, but the most important one is 125 for this to continue, and it's the highest that this has reached. What a skyrocketing effect here. As always, if you guys found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watch this video. Stay tuned till the end because there's a lot of information to learn from, and I have a new ticker symbol you won't want to miss. So for everyone that has stayed to this point in the video, the ticker symbol I'm going to share with you guys is in the mobile gaming sector, and there's so much room moving forward for this stock. Now, before we talk about that stock that you want to add to your watch list in the mobile gaming sector, I have two ticker symbols to share with you guys that other investors talked about, and I really appreciate you guys taking the time, and I'm going to share how I feel about them. So AVGR, it's a penny stock. Would I ever recommend a penny stock? Probably if there's a big event coming up or I know anything that is going to create a catalyst, I would mention it and tell you guys it's a very speculative play. There's high risk, high reward, high risk, high loss as well, right? So I definitely would state that when I'm talking about a ticker symbol like this. Would I recommend this? No, I would not tell anyone to add this to their watch list because I don't really know why it's running up. I haven't had time to check it out. It might be that they're finally becoming profitable or a new innovation that's giving this optimistic outlook, which the chart is looking pretty good so far, but the total market cap is so small that if you get in now and this becomes a $1 billion company or more, then you got in on time. But how do you know it's going to get there? It takes so much other understanding, right? You got to dig real deep. So I don't like the market cap that much. And the second thing is the income statements in the last 3 years up to 2019, from 2016 to 2019. And in the quarterly, we can see in 2020, not a single profitable dollar, right? Never been profitable. And even on the annual, it's never been profitable in the last 4 years. Now, what has changed from 2020 December to 2021 January? Could it have finally become profitable? Probably. Or it's an innovation. I don't understand this company enough to tell anyone to add this to their watch list, but this is a swing trade play or a day trade play based off the chart. I mean, you could see it here, how it's reacted a few times within just a few days throughout December, and even now in January after this pullback, it's already running back up. Now, I saw this come up on my stock screener a few times, and that's definitely something that was interesting, the amount of volume that it had, but that was just, a ticker symbol that you would swing trade or day trade. Did I consider at some point swing trading this or day trading in this? I did, but I try to stay away from these when I don't know enough, okay? Because it's very risky. Now, the second one is ASX. Now, this is comparable to yesterday's mention, which is UMC. And UMC is worth a little bit more than this one, but when we look at this chart, it's been growing exponentially around the same time frame as UMC. Very interesting. So this is another competitor in the semiconductor sector. So for the investor that mentioned this one, thank you so much for sharing it and bringing it to everyone's attention. It looks like it's had a lot of growth, but the market cap is a little bit smaller. I do want you guys to be aware of that. So if the market cap was to grow to 23 billion and it's worth more than the other one, right, which is UMC, that could be a sign that it's right there fighting with it and they're around the same valuation. But if it comes up to 23 billion and the total amount per share is less than $9.50. That was where UMC was yesterday when we talked about it. Then there could be some upward room here because it has $1 to grow and they're at the same market cap. So that means that it's almost a whole dollar ahead. I know it's kind of confusing. So the higher the market cap and the lower the US dollar, the better of a chance there is that as it continues to grow, it can actually grow with it and grow even more exponentially. So that's going to be interesting. It's a little bit below it, and you could see the price difference, right? It's $2 and some change, but they are far apart from each other when it comes to the market cap and also revenue, okay? So revenue fluctuates a little bit here for this company, like up and down. It's a little bit wild. And then it was a lot more revenue back in 2016 than it has been now. And net income. Revenue has been growing, right? And here we could see the revenue going up and down and then net income going up and down with it. But the annual revenue has been growing year after year. But the thing is, net income is more important than revenue, and net income has gone down. So every single year, it's gone lower and lower to the point that it's almost dropped to a point where it's like $500 million, but now revenue is like $13 billion. That means more money's coming in, but not a lot of money staying. It's like probably going out into different costs. So this makes this a little bit different than UMC. UMC is a growing company. Now, I'm not saying ASX isn't growing, but in the last couple of years, revenue has gone up and profit margin has gone down. So something's going on there with their profits. Either they're taking on more debt. Who knows what they're doing? You'll have to do further digging, but this is one to definitely think about. But UMC is growing tremendously compared to this one. So what's the ticker symbol you guys want to add to your watch list? Well, that is Glue Mobile. GLUU, Glue Mobile Inc. Now, this is the one that's been downgraded. It's sitting at $8.98, and price targets are up at the $10 range. Now, it's been dropped by a few cents, but there's still room from $10 to $11 from where we're at. And even if this pulls back down to that $8.50, even down here to $7.70, or even these lows of $6.80, there's so much room. We'll have to see why it's falling and what price targets are being reiterated if they continue to get downgraded. But if they stay the same, that might be an opportunity. So this is definitely one you want to add to your watch list. Do further due diligence, do further research, check out more articles. And there was a rumor that Glue Mobile Inc. was going to probably merge, right, with Tencent. And that might be Tencent's opportunity to get into the markets and not just be over-the-counter market through Tencent, but if not through Glue Mobile, which is pretty interesting as well. So if anybody knows any more information on that, or if that rumor has died down, please comment down below. But this is definitely one to add to your watch list moving forward. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watched this video. Stay tuned for more videos. Thank you guys so much, and let's make some money.